Hey Renter Retires, it's Adam Schrader, and today we're going to talk about the market update for the week ending on April 1st, 2022. Before we get started with today's video, let me remind everybody, please subscribe to our YouTube channel, click the notifications bell. Don't miss out on any of the content we're putting out trying to make you the best investor you can possibly be. And as always, know that we appreciate the time you're putting in, and we hope these videos are helpful. And if they are, please click the like button. Let us know. If you have a comment, leave it below. We'll get to it as soon as possible. But let's get to the real reason we're here today, ladies and gentlemen, and that is for a look at what on earth is happening in the market today. And what is happening is that we're back. Unemployment, which we'll talk about later, but we are finally at the unemployment levels that we were in February of 2020. And that was right before that happened, before the whole world shut down. So we'll get into those numbers a little bit more, but just know that we have finally reached the unemployment levels we were seeing before the pandemic changed the whole world. Also, it's good to know that nearly 60% of homes in the United States are going under contract within 2 weeks of being listed. 45% of the homes that are being listed are under contract within a week. This is even with higher interest rates out there. So ladies and gentlemen, boys and girls, the rates we're going to talk about in a little while for owner occupied are not slowing buyers down at all. It's just not happening. And how do I mean? Well, if you look at the sales price to list price in today's world, it is at 102%. This is up even higher than it was the last market update that I did, which was 2 weeks ago, whenever rates were a little bit lower. We're now at 102%. So there are bidding wars still going on everywhere out there, which makes our rent retirement model of first come, first serve, no bidding war look better and better and better as you're thinking about your investment portfolio. So let's get down to the actual numbers, right? Unemployment, like I said, down to February 2020 levels. What is that level? 3.6%, which is a 5% drop from the most recent numbers that we gave you. Pretty darn good number, 3.6%. Average days on market for a home? Well, this is down 22% year over year to 38 days. Not only is that good, it is quick, I should say. Maybe not good necessarily if you're the home buyer, but that's actually down 9 days from where it was when I talked to you 2 weeks ago with the market update. So things are going faster and faster. If we want to look at the median list price, the median list price has gone all the way up to $405,000. That is 14% increase from last year, year over year. So median list price up 14% year over year. We're at $405,000. An apartment list study of 177 metropolitan statistical areas found that less than 10% of them had an increase in rent lower than the 7.9% inflation rate that we saw in February of 2022. So you think real estate is a hedge against inflation? Well, guess what? You're right. Fewer than 10% didn't see rent decreases. It was just that they were lower than the inflation rate of nearly 8%. So we are seeing strong rent growth across the country. And you want to know where the fourth hottest market in the United States is? That's none other than the Cape Coral, Fort Myers area that we have properties in that are fantastic. That saw a 38.6% increase in rents year over year. It is a hot market, great place to be. Look into it. Check it out at rentretirement.com. We've got properties that'll blow your mind when it comes to their returns there. So let's get down to it. What are people seeing whenever they're going to look at their interest rates? Well, owner-occupieds with primary residence with great credit, 30-year fixed rate, they're looking at 4.768%. They're looking for a 15-year fixed, they're looking at 3.792. Yes, those are higher than they have been in the past. Not gonna lie, rates have increased recently, but as I talked about earlier, it is not slowing down buyers. Buyers are still coming in. There's still a deficit. They're still buying. Things are still good. For investors, well, with 25% down, you're probably looking for a 30-year fix around 5.5%. And when it comes to a 20% down, you're probably looking at about 5 7/8 whenever it comes to it. So 5.875% for your investment property. Higher than it used to be. Still cash flows really well. Still gets good solid returns. And don't forget, you've got massive rent growth going on right now in the United States, and rents don't drop. Rents are very sticky, just like wages. So the number of the week that we're going to throw out there is 537. 537 is the increase in monthly mortgage payments that someone is paying for today with today's rates and today's prices, as opposed to what they were paying with the median sales price and interest rates at the beginning of the year. $537. That is keeping some people in the renter's pool, which is causing our rents to go up as investors. So 537 is our number of the week. We also have some different opportunities going on at renttoretirement.com. We have some short-term rentals coming up. You can see at least one of them on the site right now. We don't have short-term rentals all the time, but we do have some opportunities going on now that you might want to check out. We've got some new ones coming down the pipe that will hopefully be there for you to see in the near future. But don't forget to head on over to renttoretirement.com anyway. You can see all of the inventory we have there. You can listen to our podcast. You can schedule a call with one of our investment strategists to talk about how we might be able to help you in your real estate journey, or help us connect you with the people that you need to help with your portfolio that you currently have. That's at renttoretirement.com. Really appreciate you watching this video. If it's been helpful, click the like button. Let us know. If you have any questions, enter them below and we'll get to it as soon as possible. Thanks for spending the time with me. I'll see you on the next video.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.